It says no one has ever said that before.
No one's ever thrown a comment in the chat about slowing down.
What's that?
No one's ever thrown a comment in the chat about slowing down.
Not even once. I've never seen it. One second. All right. Ozzy's already on top of it. He's posting in the chat. Another winner on overnight options. Was everyone here yesterday, 3:30 closing playbook?
Sure hope so. We had a massive room yesterday. People who were in there.
For sure.
Oh, yeah.
Holy smokes. AMD up 5%.
I know.
Dude, I'm tempted to close AMD already. This is getting out of hand.
I sold it after their earnings event, even though they had a triple beat and everything looked great and it sold off. And then you bought it. You probably bought the shares from me.
I probably did. Yeah, I'm tempted to close in 2 days flat, guys.
Another one that's crazy is Apple just having another really rock solid day. But Nate, I'm curious your take on it. I'll be most likely trading Apple this week, to be clear, but I am a little concerned that it's just popping on kind of artificial news.
Well, I do think it's artificial news, but I also think that the real, fundamental reason that Apple will go up will kind of catch up to that news. So this is Apple. Let me add it in there real quick. I might have to pull you off and throw mine up there. So this is actually Apple on the monthly chart. I always tell people, not a lot of people looking at the monthly chart, but I like to step back and look at the monthly chart every once in a while. I think it looks phenomenal from a technical standpoint on the monthly chart. You know, I did that interview with MarketBeat a couple weeks ago, and I said, hey, I got some boring stocks that I really like right now, and one of them was Apple. And I kind of got beat up in the comments from people like, oh, Apple's over, Apple stinks, whatever. And they might be right. I mean, maybe Apple has lost, its swagger, and it would no longer be a top dominant stock. But I shared that I think people get the narrative on Apple wrong, which is that they've never really been some massive innovator or inventor of new technology. They've really always just kind of taken things that already existed, packaged them up in their marketing, used their consumer base to, make them fantastic and put up insane numbers. And so when people start getting down on Apple because they haven't invented some new AI technology, I just think that's really the wrong way to look at Apple. I think they'll continue to acquire AI partners. They'll continue to infuse their devices with AI, and people are still going to want to use the newest AI technology on their iPhone, at least for the short to medium term, until maybe iPhones go away and you don't even need phones because of whatever else. But I think we're still a good ways away from that. So I really like Apple. And I think right now, if you're looking at this chart, this is a monthly chart. And I think it's really positioned well. This is also, by the way, the trade I did that $10,000 trade, that live trade on. I'm sure some of the folks were in the room when I put on that $10,000 trade for the same reason, because it had kind of bottomed out right in this 200 area here and looked like it was going to bounce. And so I actually closed that trade out, or at least most of my contracts this morning. So if you guys were in that trade, that was the what was it? The 202.50, 205? I can't even remember. I think it was the 202.50, 205. I went ahead and closed most of those contracts today.
Right on. That's a good point. The monthly chart. I think I showed that probably 2 weeks ago. Apple touched their might have been a weekly. I gotta find that chart, but touched a 200 moving average for the fourth time in the decade. Each time it's gone up and doubled from there. So.
Yeah. All right, folks. Well, we got an absolutely packed set of things going on today. Graham is going to be doing a full training, which I'm pretty excited about. I'm going to share a little bit of a hack that touches on what he also talked about during the closing playbook. By the way, guys, hope you guys enjoyed the closing playbook. Let us know your feedback on that, because it is going to be a faster moving, quicker hitting session. And we're going to have to kind of, get up to speed on how exactly we want to manage that room, how much live trading versus how much Q&A. It'll be something that we have to get in a groove on, because I know it went quite fast yesterday, and it's always going to go fast because with Graham and I's time commitments, we frankly can't do 90 minutes extra every day in closing playbook. It is going to be more of a fast moving trade session. And then we're going to spend more time here in the morning sessions doing the deeper training. And speaking of that, Graham's going to do the deeper training right now, but I'm going to jump ahead of him real quick just because of that overnight option trade that we talked about. So I do want to kind of steal the thunder a little bit here and spend some time talking about that. I'm just going to take like 5 minutes here real quick to review that. And also, of course, push you guys to get on board before our next opportunity, which is going to be today. That's the beautiful thing about overnight options. You don't have to wait long for the next opportunity. That'll be today. So just a quick announcement before Graham dives into our training. Yesterday, on our first ever closing playbook, I did something that I have never done before, and I actually gave out the overnight option trade for free. So here's the trade. If you guys remember, we set the trade. We happened to get it right near the top as the market was coming against us. And then we set our line in the sand.
Are you sharing screen?
I didn't. Of course, I didn't add it. Wait, let me start again.
I wonder, I'm like, am I looking at the wrong thing? But
there we go. Okay, hold on. Sorry. Thank you, Graham, for calling that. I got to get used to the add it to stage feature instead of just sharing. Okay, quick announcement. Here we go. Let me do this again. Yesterday, in our first ever closing playbook, I did something I've never done before, and that was that I gave away the overnight option trade for free to everyone in closing playbook. And this was what the trade looked like. So we got in right as the market was actually coming down a little bit, and then we put our line in the sand about $1.50 below where we got into the price. And so the idea of this trade is that anything above this line by the end of the day today would be a winner, okay? Because we put on today's expiration date when we set up the trade yesterday. What we're counting on when we take this trade, besides just hacking the options themselves, because I think that's the biggest advantage in terms of the trade structure, but we're also counting on the most powerful phenomenon in the stock market, at least in my opinion. And this is what it is. This is showing you what happens during the regular day in the market versus what happens overnight. So this is where the cash money actually hits, guys. This orange line is the performance of the S&P over the last 30 years overnight. And the blue line is what happens during the day. So if you literally buy the SPY every day at 9:30 a.m. when the market opens, and then you close it every day at 4 p.m., meaning you own the SPY for every single normal minute of its open time, you actually make no money. Which, I don't know about you guys, I think that's one of the most mind-blowing stats in all of the stock market, is that if you owned the S&P, which is up thousands of percent, for every moment of its actual normal trading day, you would have made $0 over the last 30 years, because all of the movement, all of the net movement over time actually happens overnight. And that's what this orange line is showing you. So we expect that a majority of the time, the market will drift higher overnight and make our trade more valuable while we sleep. So that's why we put that trade on right at the end of the day, and then we expect the market to do its work for us while we sleep. Unfortunately, market makers know this, like we talked about with the other trade setup and setting up the time. They're not dumb, right? They know this. So they price it on regular call options where you would lose even if the market moves in your favor. So if you just buy a call option, at the end of the day, it's going to be priced in and you're going to lose money even if you get the direction right more often than not. But with overnight options, we stack the deck by using a defensive trade, just like the one I showed you below the price, and we have a take profit. So we're kind of double stacking the deck so that we get out of the trade as soon as the move occurs, instead of just hoping that it stays above our line. Because like today, we don't care what happens the rest of the day. It doesn't matter if the market flushes, if Trump says, hey, we're tariffing ourselves 90% and the market drops. It doesn't matter. We are out with our cash on the sidelines. So what actually happened? Let's take a look at what happened last night. Remember, we put our trade on right here. Then the market closed, and this is the overnight drift. You guys see this? This is the overnight drift. And this is relatively typical. I mean, we got a pretty big one last night, but this is relatively typical. Do you guys see how the market just drifted higher overnight, right? Just, it looks, Mike, it looks like a gap up, right? You say gap up, but in reality, it's not really a gap, right? It's the market drifting higher overnight where none of us have access to it, and the real damage is being done. And I mean, the positive damage is being done. So Who made money when the market opened this morning after that positive drift? Give me a yes in the chat if you guys made some money on the overnight trade. Hopefully, tons and tons of you, because we actually, oh my goodness. All right, there we go. Now we're talking. Awesome. Immediate fill it open. Yeah, immediate fill. Russ got some extra, filled at 92. Wayne, Jim C. Holy smokes. That's the most yeses I've ever seen.
We had like 800 people there yesterday. So hopefully, even if half of the folks got it, it's 400 people who made some money there.
That's awesome. Okay, that's the most yeses I've ever seen. You guys are awesome. I love it. I love it. I love it. I love it. Jim, you should be out already. You can close it now, but you should, if you set your target like I showed you yesterday, you should already be out of the trade. It hit the target literally 10 seconds into the market opening. So that's 24 out of 26 on overnight options. We are killing it, and you guys are killing it. I mean, I asked for some of you guys to let me know if you won on the down day a couple days ago. $720 on profit from Chad. Mike loved it. John said, yep, made money, $850. We had Jerry make money. We had Dave make money. Jim set in his perfect track record, 8-0. He's up $1,900 on the last 8 days. We had winner from Sly, who's up. We had another one from Laura, who's up. We had another one from Charles, who's up. We had another one from Pete, who said down day, still made money, who's up. And I know, as crazy as it's been, there are some folks in the room who are still not trading with me. And maybe you didn't totally follow. Rich said he made almost $1,000. Maybe some of you who didn't totally follow what was going on. Like Paulina said, it wasn't clear to her. Paulina, I think it was mostly clear because we had about 500 people say they hit. But I understand, maybe not clear for everyone because you haven't gone through the training yet. Well, I told you if we win the free one, you got to join today, right? Everyone said deal. Now, I'm just kidding. You should only join if you actually want to join. You shouldn't feel forced to join because we hit the winner. But let me quickly show you why I think it's a no-brainer to join. So here's what you get in overnight options. You get the full masterclass in the training. So if you guys are still unsure of how it all works, how we're using that overnight phenomenon, how everything ties together, there is a ton of training for you guys in the members area, all kinds of stuff that you can take full advantage of. You're also getting a massive amount of alerts because we do this trade every single day. Well, I shouldn't say every single day, Monday through Thursday. So we do this trade constantly. We'll get our next one today. You also get live trade sessions. Whenever we go live and do the trade together, you'll get that. You'll, of course, get the incredible track record. You'll be able to view through it, look at all the trades. You'll also get a 14-day guarantee, which an overnight option, that's like 10 trades. So it's not like you're getting one trade. You're going to get all the training, all the master classes. You're going to get everything, and you'll have it 14 days. So you have like 10 different trades you can take before you decide. Plus, you get a bonus that I'm working on, which is going to be pretty sweet. Graham's already seen a sneak peek of the overnight options indicator scanner that I put together. That's really cool. And I'm working on that, and you guys will get that for free. What do you think, Graham? Like a $9.97 indicator that we would typically sell separately?
Oh, yeah, if not more.
So it's pretty cool. It does all the options analytics for you, pulls it up in a cool ready-made scan, helps you set up your trade, helps you set up your risk reward. You guys will get that 100% for free, and you get it for $823. You get it for less than the value of what I think just the new tool I'm working on. And even though this is more trades than a regular service, you get an entire year for $823 right now. So where else can you get 200 plus overnight trades for less than $1,000 a year? I don't think anywhere else, especially when we're hitting at a rate like we have. Just the last 1 month, that's like 20 trades, 1K in each. You would have over doubled your money. You have enough to pay off the entire service with $1,243 left over on top. If you had 5K into each, like a couple people mentioned, you're sitting on 10 grand in profit with a beautiful win rate. There are two losers. You can see them right here, two losers, but still a whole lot of profit in 1 month, including winners and losers combined. So there it is for you folks. If you were one of the people in the chat yesterday who said, all right, prove it to me, Nate, show me a winner, and then I'll be in. Well, here's your chance to be in. And yes, it is literally only $823 for an entire year, 200 plus opportunities. So Dave, if you want to drop that link in there, you guys can either click the link in the chat that Dave just posted, I think it should also pop up maybe somewhere on your screen or in the announcements, lots of different places you can find that link. But just click that link either there or click it like on the little banner. Anywhere you want to click it will do the trick, and that will pre-pull up. So you don't have to type in any code or anything fancy like that. It's going to pull up the already discounted $823 order form for you. So yes, if you're already an overnight option member, you don't need to do anything. You will get the bonus for free. I'm working on that. If you are not an overnight option member and you want to jump in, you want to get the masterclass, you want to get the 823 discount, and you want to get today's trade, just click that link anywhere on there. Now, I'll leave this up for like 1 minute because Graham does want to dive into our training here quickly, and I've already used a little bit more time than I was planning on. Carla said, fair is fair. We did say it was a good deal. Carla, yes, I tried to, put some proof in the pudding before asking, but obviously I'm joking about you guys. You guys should not feel forced to join. You guys should only join if you actually want to, and you've started to see the power of it, and you want to give it 14 days to see if I can continue to prove this out to you. Guys, we're never going to do better than $823 for 200 trade alerts and everything else you're going to get. So take advantage of that. Like Karen said, if you want to do lifetime, that's even better. I got a couple extra bonuses for the lifetime members I'm still working on. So I've got a couple extra things up my sleeve. Dave, yes, every trade is like the one yesterday. We're hacking that trade with that debit spread because that's what gives us the extra advantage on top of the strategy and the advantage that we build in from that. So I think that's all I have for you guys. I'll leave that up for about 30 more seconds. Graham, anything else that we need to do before moving into the training there?
No, nothing particular. I was just sitting here looking at that and thinking to myself, why do we have it at that price?
I ask Josiah that about every day. Yeah. Every time we hit a winner, I say, Josiah, why are we doing this $823 again?
What is this? The clearance rack here? That's amazing. Yeah, definitely, guys. You definitely want to take advantage of that. And here's the cool thing, Nate. For the folks who've been taking the 60-minute income trade with me, we make our money during the day. Overnight options makes the money overnight. So they're kind of like the perfect 1-2 punch.
Right.
Where you can have something working for you overnight and then something working for you during the day. It's a really great combo, and they stack up really nicely together. So for that entry price of $823, I think it's a no-brainer. So hopefully you guys get a chance to check it out. Brandon says taking 27 trades, 25 wins, 2 losers. That's amazing. Oh my gosh, Cheryl up $20,000.
Absolutely crushing it. Someone asked how many contracts to target $100 a day. Great question. That's one that we actually get quite a bit because a lot of people are targeting that 100, 150. So that's like 5 or 6 contracts a day that you would trade, and then you would obviously want to scale up over time. So let me stop sharing, but I posted that link one more time in the chat for you guys. Thanks again for all of you who took the trade with me yesterday. That was so cool to see 500 yeses pour through the chat here of all the people who are making money. I mean, it doesn't get more fun than making money with all your friends. You know what I mean? Like that was pretty cool to see. So thanks guys for joining me on that. And hopefully a ton of you are jumping in today before our next opportunity.
Awesome. All right. I'm going to take the screen share from here, Nate. I'm going to try and make sure I do this right. You guys can see my screen, right?
Did you add it in yet? Let's see. Is it this one?
Hijacking options.
There you go.
Okay, cool.
I added it for you.
Oh, nice. All right. I'm still new to all this. All this is new to me. But hey, I'm enjoying it. New platform's great. All righty. Well, thank you, Nate, for that awesome little walkthrough there. The overnight options free trade. Love that. Today, we're going to talk about kind of the opposite effect of instead of holding overnight, what happens if you add time? Now, Nate has been doing a lot of training, kind of taking you guys through options omega. So if you've been coming to Opening Playbook, you probably have a little nice little baseline groundwork set in stone. But we're going to walk through a simple guide to market moves and how time, and I really mean like time on your watch, can be your new best friend to target doubles, sometimes even bigger returns from very boring trades. Now, I call it hijacking options. We're going to talk about it today. We'll do some live trades as well and see how they work out. So before we get going, I do have to say this. Remember, guys, we have just added in the closing playbook session each and every day at 3:30 p.m. Eastern time. So this is just your fair warning reminder that this is not all we have for you today. 3:30 p.m. today, we're going to have the closing playbook. And right now is a great time to kick that off because we're in the heart of earnings season. We've got some great names. The Trade Desk, which we love to trade. Block, formerly known as Square, ticker XYZ, is a great one to trade on earnings. Pinterest is a great one. Team, Take Two, Twilio, a lot of great names today. And we'll be covering that today at 3:30. Nate will be running the show there and taking you guys through some bonus trades this afternoon. Now, something really cool, and this is just a special note for that, something cool about the Thursday trades, right? Today is Thursday. Well, since tomorrow is expiration day for stocks with weekly options, we can do wrap orders, elite trades, jump debit spreads, so we can go out of the money with 24-hour hold time. So if I were to do what I call the wrap order on Monday, I typically wait till Friday, a full week, to see the payout. The cool thing about Thursdays is you don't have to wait a whole week. You get to see it overnight. So obviously, Nate will cover that in a little more detail this afternoon. Make sure you're there at 3:30 p.m. Don't miss today's session. All right, now to the real training today. My name is Graham Lindman. In today's class, we're going to build off the wrap order training we did just recently. So I hope you guys we're all able to make it. Hope you're familiar with the wrap orders. When I say wrap order, hopefully you get a good idea of what I'm talking about. If not, don't worry, guys. Go back to the training. Just watch the recording and then watch this recording. It'll all make sense and hopefully click for you. So if you didn't get a chance to catch the training, don't worry. It's recorded in the $1 opening playbook VIP portal for you to review. If you guys need that link, just post that. Need that link in the chat, and Mr. Mound will post you that link. It's $1. You get all of the recordings and everything. We had to charge something, so we made it as cheap as possible. Now, for a quick review, wrap orders give us around a 1-to-1 risk to reward ratio from a small move in the price of the stock. Hopefully you remember this chart. We wrap the current price of the stock like a burrito or like a hot dog where we want it to go higher. And when it all works out, as long as it drifts in the direction it's already headed, we can earn about 100% return on investment. Now, again, you normally only need a very small move to hit. For Apple, for example, with the wrap order, as long as it gains about 0.5% or more that week, you double your money. For Nvidia, if it gains about 1/3% or more that week, you double your money. So again, very, very small moves pay out very, very large returns. And that's the secret to how we're using these options and leveraging them in a way that I don't think anyone else really knows about or does effectively. Now, up until now, I've been primarily using the weekly wrap orders. You guys have probably heard me talk about the perfect income trade. We do some in here as well in the opening playbook for free. You typically place a trade on Monday and let it expire on Friday. And we focus on high momentum stocks, simply betting that they'll just keep drifting in the direction they're already headed. We don't need them to double. We don't need them to go up 10%, not 5%, not 3%. Normally like 0.5% is all we need for us to hit our payday. Now, we've been able to see some killer results from trading this way. And I'll show you the full results from the perfect income trade later, just so you can see how good it's been. But just let's talk about the numbers first and why this is a winning edge, betting on winning stocks just to drift in the direction they're already headed and getting a 1-to-1 risk to reward. So let's say you do 10 trades, and just for simplicity's sake, let's say $2,000 in each trade, non-compounding, just one trade a week. And let's say you hit 7 out of every 10 trades. That's about what my win rate is over the last 2 years trading this way with a 1-to-1 risk to reward ratio. So when we win, we're doubling our money. When we lose 100%. But we're not winning half the time. We're winning about 7 out of every 10 trades. So week 1, you double your money, you make $2,000. Week 2, you double your money. Week 3, you lose. Losers happen. And then just over and over again, staying consistent, doing the same type of trade on Monday, letting it expire on Friday. This is based on $2,000. Obviously, you can start with more or less. You get the picture. Win-win loser. Win-win-win loser. Win loser win, and finish off with a win. So 7 out of 10. Even with 3 losers, that would tally up to about $8,000 in profit after 10 weeks. If you want to reframe that, that's about $3,200 per month on average. So that's pretty amazing. And I hope you guys can see, and hopefully this is making sense on why this 1-to-1 risk to reward ratio is great when you can win 7 out of every 10 trades. So again, when we win, we're doubling our money. When we lose 100%, but we're winning 7 out of every 10. Over time, that stacks up very nicely. And that's how we've been able to see such strong results with my premium program that trades this exact way, the perfect income trade, which is hitting at a 600% compounded annual growth rate, which is just out of this world. And you can see here the base, if you started with 5K, this is over about the last 18 months, it's up $150,000. No compounding, no fancy math, just trading this very, very basic way, just betting on good stocks to keep going in the direction they're already headed by using the wrap order. Now, honestly, I'm going to trade this way for a very long time because why would I not do this? It's obviously working great. It's paying nicely. I'm just going to keep on doing this over and over again. But the other month, I did have a mini light bulb moment. And Nate kind of exposed part of it for you guys as well when he was doing the option omega testing. But what if there was an easier way to do this without having to pick the best stocks for the week, but instead using more of a mechanical approach, blindly placing the same trade on the same stock over and over again each week? So to give you guys an idea, again, for the perfect income trade, I have to pick what I believe is a good high momentum stock, run it through my filters, run it through the test, and just say, hey, I bet this is going to go higher this week, which has worked out really great. What if there was a way that involved zero thinking? What if there was a ticker that we would pay over and over again on average, obviously not winning every trade, but more often than not winning, and we could just blindly take it each and every week, regardless of market conditions? Well, let me walk you through how my journey started and how it ended up and where I see the best results right now. So hopefully you guys can apply some of this to your trading as well. And let me take a breather here, check the chat, see if I miss anything. Does this all make sense so far? Just trying to set up here how, I started with that wrap order, that weekly wrap order, shooting for 100% targets on a small move. Then I started opening the door to more ways to do this, mechanical ways without even thinking. So what I wanted to do was I wanted to find something unique that, again, we could just do blindly over and over and over again. So I noticed something unique in the volatility index that sparked my imagination. And it kicked off a search on a new way to use these wrap orders. Now, it all started with the VIX. Hopefully you guys are familiar with the VIX. Now, here's what you need to know. The VIX tracks volatility in the markets. Really, people call it the fear index. It really tracks the prices of options. When it's going up, options prices are increasing, meaning uncertainty is increasing. Bi-directional moves are increasing. And when it's going down, that's coming down. But as you can see here, like this is 10 years of the VIX. And it, 15, it gets down to about 10, spikes to 20, 15, 10, 20. It always stays in this range, right? You could say this is pretty flat. Take out this, but even so, the price doesn't change. The reason I'm pointing that out, most of the time the VIX is flat, hanging around that 15 to 20 level. But here's where things get really cool. If you want to trade volatility via an ETF, using like ticker VXX or UVXY, it does not look the same. So I just showed you what VIX looks like. It's flat, right? But UVXY looks like this. Does anyone see kind of something odd here? Or am I the only one? This is supposed to be the ETF for the VIX. VIX is flat. This thing has gone straight down. So first off, why is the UVXY so far off from the VIX? Well, the UVXY is constructed by buying front month VIX futures contracts. So the reason it has this downward slope is because, like, if you were buying weekly options, what's going against you? Options decay, time decay. It's the same thing for UVXY. It's buying front month VIX contracts with time decay going against it. So that's why even when the VIX is flat, UVXY is falling because it's paying the time decay. Hopefully this makes some sense, and this is pretty deep in the weeds. Now, since the VIX is typically flat about 65, 70% of the time, in theory, UVXY would be falling during that 65% of the time. Because remember, while VIX is flat, UVXY is decaying. So if VIX is flat about 65% of the time, it would stand to reason that UVXY is decaying about 65% of the time. So what if we could do a bearish wrap order on UVXY, knowing that it's going to be falling more often than it's rising? Does this make sense so far? Basically, what if there was a mechanical way to just say every single week, I'm going to place a bet that this ticker is going to decay, knowing that it's not going to go, like, there's weeks where it goes up, but more often than not, this thing is going down, 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 down. And Ray's asking, is UVXY eventually going to go to zero? It would get very close to there. However, every time it gets below 10, they end up doing reverse stock splits. They did it I think they did it last year. Propped it back up to like $14, $15. So pretty soon, I bet you they're going to announce a reverse stock split, prop it back up. Now the price doesn't move, like the actual value. It just they do an inverse. They don't split shares; they do the inverse there, which just artificially increases the price. So no, it won't go to zero because they'll just keep reverse splitting it. All right. So the question is, what if we just mechanically do bearish wrap orders on UVXY over and over again, knowing that it's falling over and over again, right? That would be a secret. That would be a serious hack. Problem is, UVXY is trading at $14 per share. And if you've gone to the wrap order trainings, you know that I don't really like to trade ones that are under $50 because it just means we need a bigger move to hit. You really need like a 1.5%. If it's perfectly wrapped, about a 1.5% drop each week to hit our target. There's some weeks where it drops 1%. That's still in our favor, but we wouldn't win. So it's going to be an issue. It's doable to hit that, but not great. And depending on options pricing, it could be a solid strategy, but probably not a massive money maker because the underlying price is just too cheap to take advantage of these weekly wrap orders. But then it hit me. If the UVXY is constantly falling over time, wouldn't giving myself more time for it to fall increase my odds? Does that make sense? Instead of hoping it falls 1.5% in 1 week, what if I just extended that time where I just bet that it could drop 1.5% over 2 weeks? So I had twice the amount of time to make the same amount of move on a decaying asset. Hopefully that kind of was a little light bulb moment in your head as well.
Graham, I can weigh in and say, yes, it does make sense. Just
There
because
you
you weren't getting enough affirmation in the chat, I felt like I needed to jump in here and say, yes, that does make a lot of sense.
Thank you, Nate. Thank you. There's Ray. We got Ray. So we can blindly. So sorry, I ran the test on this. 2 week holding time. Just betting on UVXY to decay and hit our profit. And you can actually blindly do this week after week and churn a nice profit. So the total trade counted 431, winning about 72% of the time. With the 2 weeks till expiration, you're just doing a wrap order with 2 weeks out, and each and every week you just add another one on. So eventually, at any time you'd have 2 open, and then by the time you're in week 3, setting the next one, your first one is expiring. So it wins 72% of the time. And if you know anything about wrap orders and the 1-to-1 risk to reward ratio, you can make some good money on that. Now, to be clear, I do want to be clear here. If you can wrap the current price and use that 2-week expiration and the odds look good where you get that 1-to-1 risk to reward ratio, that is fantastic. That should be, in theory, a very, very lucrative strategy. Now, some of the times they have the options priced in. So you need to be very picky with the options that you would select. And then you need to be able to repeat this every week over and over again. So let's just take a look at this together and I'll show you what I'm talking about. I got to exit this full screen. All righty. And I apologize if I know this is very in the weeds. And when I said it's like deep market talk, let me make this a little bigger. All right. So we're going to UVXY. Again, you can see just the decay over time. Look at that, just down, 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 down. So basically, you would just place a bet that 2 weeks from now, August 22nd, you would just bet that this thing keeps falling. Now, the price is 15.16, so we're probably not going to get a perfect wrap. That's not very good at all. But here you'll see, so like here's $1, for example, $1 spread here. We typically want to enter for about 50 cents, but look, the market makers have it priced in. that this should be about 50 cents. It actually should be should be lower than 50 cents. But you can see market makers have it priced in that this thing is a decaying asset, so it should keep falling. So that's a big issue for us because we don't want to enter for 66 cents. We want to enter for about 50 cents. So let me continue on my spiel here. So that ended up pricing us out of a lot of these trades, unfortunately. So it's really not optimal to do this on the UVXY or VXX to take over and over again. But this was the foundational kind of discovery and rabbit trail I went down that's going to open up a pretty awesome opportunity for you guys. Because I was onto something with that more time aspect. That was that light bulb moment where everything clicked for me. And I just kind of stumbled upon it. But then I had to ask myself, given enough time, what other assets work with a really high accuracy rate? Well, hopefully that light bulb went off for your head as well, because obviously the S&P 500, most of the time the stock market is grinding higher. About a third of the time we'll see a big drop, but other than that, it's just chugging along. So what if instead of giving the S&P 500 1 week to close higher, what if we gave it 2 weeks to close higher? So I tested that, and over the last decade, giving it 2 weeks, S&P closed higher 62% of the time. If you're going for a 1-to-1 risk to reward ratio, anything over a 50% win rate starts making money. This is a 62% win rate. That's making money. Then what if we gave it 3 weeks? And what if we gave it 3 weeks to go higher? Markets like going higher over time. The more time we give it, the better our odds are that it's going higher. Well, that worked out about 64% of the time. What if we went 4 weeks? If you gave the S&P 4 weeks to go higher, you win 70% of your trades. And I know Nate, if you guys have been, hopefully you've been paying attention. I know we've got a lot of new folks here. Nate will cover that the option omega testing that he's taken this to the max, to the extreme, and walk you through how 60 days has just been absolutely insane with that profit target in place.
Yeah, we'll probably do the full stacking strategy here in the next 2 weeks once I reveal those metrics, and then we'll put some cool stuff in the OP VIP members area for the people who want to kind of get a cheat sheet and all that.
Awesome. So does this make sense though, guys, that by adding more time, our odds increase? So let me just do this. Sorry, let me make this a little bit clearer, just so you can see it a little bit easier. 14-day hold time, we have a 62% win rate. 3-week hold time, win rate goes up. 4-week hold time, win rate goes up. And if you keep adding time to that, your win rate keeps going up. Think about it this way. If you gave the S&P 1 year to finish 1 penny higher, that's going to be pretty darn close to 100% win rate, because over time the S&P goes up. So the more time equals a better probability. Keep in mind, guys, we are talking about hitting a 70% win rate with zero market skill. You don't have to know anything about stocks, anything about the economy, anything about fundamentals or technical analysis, and you can win 70% of the time. Now, that's what I call a mathematical edge. Just by simply, again, in this example, buying SPX and waiting 4 weeks to see if it goes higher. Average results, 1% move on the SPX, which obviously is more than enough to make wrap orders work. We typically need about a 0.5% move. With the S&P, it needs like a 0.15% gain to make money. So now, what if we give ourselves more time to let the obvious move happen, right? Stocks go up. So obviously over time, the more time you give it, the more likely you are to hit. So instead of just placing the trade Monday and giving it till Friday, what if you place the trade on Monday and give it 4 weeks? Again, this isn't rocket science. This is just basic math, knowing that as long as we can get a good fill on our wrap orders, we can do this every single week, given it time, and eventually the Friday should start paying out with about a 70% hit rate. So you place a trade, wait 4 weeks. You don't see the results right away, but look, by the time you get to trade number 3, trade number 4, you start getting that waterfall effect where that trade you placed 4 weeks ago is now paying. And each Friday you're hitting another payday. That's that waterfall effect that can be really, really cool once you get the ball rolling. Now, of course, guys, there's going to be winning weeks. There's going to be losing weeks. So the key here is being consistent. Now, I'm going to give you the basic theory of it. And then in the later classes, I'll let Nate take this one all the way home and give you the exact rules for it. But let's just talk about the basic theory of it, of why market math is fun, why it works, and why I love it. So let's say you start with $1,000 per week. You don't compound, you don't change position sizing, you just follow along. In theory, once I get the ball rolling with a 4-week lead time and give it time for it to average out where I'm starting to get that waterfall effect, if I'm winning 70% of the time, which I just showed you, over a 4-week period, the S&P wins 70% of the time. That's 7 out of every 10 trades. After placing the first 10 trades, based on a 7 out of 10 win rate, that's about $4,000 in cash flow with up to 4 trades open at a time. So $4K after 10 weeks. After 52 weeks on that same pace, that's about $21,000 in cash flow generated on roughly $4,000 total risk at any given time, because we got 4 trades open, each at $1,000. Over time, obviously there's going to be winners, there's going to be losers, but staying consistent, I just showed you the data over the last 10 years, that generates about $21,000 a year. That means we are earning around 100% ROI on our total investment every 10 weeks on average. In other words, about 40% per month. Now, again, the key here is being consistent, because there will be weeks with 100% loss of capital. So you don't want to go all in, scale up, compound everything, and then lose it all in 1 week. The key is just being consistent and just doing it over and over and over again. And remember, if we hit 70% of the time, the good outweighs the bad to the tune of around 40% per month on average. So real quick, any questions here so far? Does this all sort of starting to make sense? And again, I'm not going to give you the exact rules. I'll let Nate do that once we fine tune the exact strategy. But I hope this market math theory makes sense of how we can turn and we can ditch all of the confusing technicals, ditch all the confusing fundamentals, and just play market math to our advantage. So when you have something mechanical like this, you can have all sorts of fun. And Gordon, you need $4,000 in this example because I'm saying $1,000 in each. And remember, 4-week hold times. So we at any point have 4 trades open. That's where I got the $4,000 invested from. So when you have market math, and again, this is not a predictive ball. This is not, I'm not buying treasury bills here where we're guaranteed income. But by playing the odds, you can do fun things. Like, for example, my mortgage here is $2,500 a month. So I have to ask myself, what would I have to invest in order to earn $2,500 per month on average? This is just an example. But I'm just saying, if I wanted to try and target my mortgage each and every month by using this, what do? Well, you just run the math. So at 40% ROI per month, which I just showed you, I would need to put aside around $6,000 and split it up in 4 trades. So each week, I would just place a $1,500 trade. And if the math checks out over time, on average, it would look something like this. Week 1, I make $1,500. Week 2, make $1,500. Week 3, lose $1,500. Week 4, make it. Winners and losers along the way. And that would produce about $6,200 in income after 10 weeks, $625 per week on average. Obviously, winning weeks, losing weeks, but when you average it out and let the math work for you, that ends up producing about $2,500 a month. So you can do fun stuff like this when you know the odds, when you know the math, and say, all right, let's work the math backwards to see what do I have to do to cover a certain thing, or maybe I want to save $1,000 a month. What do I have to do to earn $1,000? Now, of course, if you've been following along in the opening playbook, Nate and I have been optimizing this. And right now around 60 days for best results, profit target, there's some very, very specific information, and we'll keep playing with it. Like Nate said just a moment ago, we'll optimize it and give you guys the exact rules. But in summary, what I just showed you would be the, this is let me just say buy. In summary, the basic principle is to buy a bullish wrap order on the S&P and give it 4 weeks to work out. 70% of the time it works out. Now, again, a lot of these options are priced in, especially on the volatility index, the SPY, SPX, QQQ. If you look at it, the more time you give it, the less overall potential it gives you, because market makers are smart. They don't let us, if everybody did this, they would go broke. However, here's the cool part. So here's where we come to a big, giant conclusion. Long story to get there. I took you through the VIX, the SPY, but number 1, individual tickers get much, much better prices and fills than indexes do. So let me just start. Don't want to confuse prices So like I showed you with UVXY, it was a little bit more expensive to enter than normal. Same with the S&P, same with the QQQ, but individual stocks are pretty much one-to-one risk to reward no matter what stock you pick. I've shown you guys this before. I showed you with NVIDIA and UNH the other day. Both give the same odds, and UNH looks like this, and NVIDIA looks like this. Individual stocks, they do not price it in. So if I use this same theory, the same thinking, what if I just did a trade on Apple and gave it 4 weeks and did it every single week with much better prices, much better fills? How does that look? That's food for thought number one. Food for thought number two is who says 4 weeks is the optimal time? We had some people here in the chat posted actually. What if I held for 6 weeks? What if I did 8 weeks? Who says 4 weeks is the optimal time? So if I was filled for a one-to-one risk to reward on, let's say, Progressive, for example, over the next 6 months, if I gave it 6 months to move higher, statistically, that's going to have very, very high odds of paying me. Excuse me. Progressive is a stock that chugs along higher and higher. If I give it enough time, it's almost certainly going to do that. So who says 4 weeks is the answer? Well, that's where the Apex indicator, in my opinion, is an absolute moneymaker for this type of approach because it's the ultimate win rate and time combo. What I mean by that is the Apex stocks are each individually back tested, each individually coded to that specific stock with a very, very good win rate and the exact time on average to hold to hit that winner. So hopefully this clicked for you guys and you can see, oh my word, we now know the exact optimal time to hold for each ticker. And we have a very, very cool win or very, very amazing win rate doing that. So again,
well, and also on top of that, I think what's cool about this is if you look at the S&P and optimize it, which I'm a big fan of, and I think we're going to do some really cool stuff with it. You can only optimize it so far, right? Because the S&P is a group of other stocks. Mm-hmm. So the fact that Apple moves a little bit slower and AMD moves a little bit faster, or all these different things are going to blend into something that you can kind of optimize on the S&P. But if you separate it out and just trade the best stocks in the S&P and then optimize, you're kind of getting like triple dipping on your optimization of how good you can do with this kind of strategy.
Mm-hmm. You're exactly right. So let's go ahead and look at the Apex, for example, and I'll pull up the hit list, this one here, so I can show you exactly what I mean, because we've now optimized that time factor that I just showed you here, how much time is needed to hit that profit target with a very, very high accuracy rate. So I'm going to pull up Apex now, and we're going to go look at this together. Keep in mind, guys, I'm going to show you how I would trade it with the wrap order. You can trade it with basic calls. You can trade it with basic calls and puts. You can trade the underlying. I'm going to talk about that too here in just a moment. But let's go ahead and look. AMD probably would have been a great one to trade. Too bad it hit its target already. Let's see. Apple's probably firing off. So here's Apple. And then, so we know that Apple is an Apex entry, right? We can all see this. Blue arrow, blue candle, you can't miss it. Pretty obvious, right? So here in the members portal, you have your Apex stock hit list. And again, if you're not a member, I'll show you how to get this on your charts here in just a moment. But just so you know, based on what we just talked about, we know that every time Apple gets a blue arrow, we know that it hits the profit target about 88% of the time. You have all this information. So you know it doesn't work every time, but 88% of the time is pretty darn good. 88% of the time, it's hitting the profit target in about 4 weeks. So we have the win rate and we have the time factor on our side here. So what you can do now is you can just basically place a bullish wrap order saying, hey, this has pretty good odds of working out. And I'll talk about out of the money here in just a moment. But first, let's just start with this 1-to-1 risk to reward ratio that when we get this blue arrow, typically it goes higher in 4 weeks. So I'm going to come to Apple here. I'm going to go to trade. And then I need to type this up for you guys too. So we're going to give it 4 weeks. Let me just get ready to type this on our trade sheet for the opening playbook. Today is August 7th. All right. Apex entry on Apple. All right, what is today? The 7th. So we're going to go 1, 2, 3, 4 weeks for Apple. I'm just going to wrap it at the current price. It's a little expensive here. I would like to see this at 250, but it's because Apple's almost at 220. Let's see what happens if I go a little bit. So this one will be better. And then let me just see what this move is. 3%. All right. I'll give you guys this one. But basically what we're going to do here is we're going to say we're going to give it 4 weeks for Apple to drift higher, because we know with the Apex cheat sheet, it typically hits its profit target in 4 weeks. Now, in this example, the profit target is at 229, 228, 228.96, so 229. However, with the strikes I'm going to use here, we don't need that. We're going to give it about $4 of breathing room, so about 2% less of a move. So let me type this up for you guys. This is Apple, and I'll run the math for you, but we're going to buy the 5th of September, 2025, 215 call, and I'm going to sell the 5th of September. We're just going to do a debit spread, 225 call. This is right now a net debit of 493. You can see that there, and let me post this in the chat. And now, because I'm just going to run the math for you here quick. If you don't know how to do this, go check out the trainings, but we have calculators for you too. $10 width spread, entering for 490. We have a chance to make 104% return on investment, assuming that Apple does what it normally does. 88% of the time it hits the target in 4 weeks. If that happens, I make 104%. And again, I don't have time to cover all of this, but even if it doesn't get to the target in that time, we can still make some really good money. So there you guys go. Apple freebie on this whole time concept. I'm giving it more time based on what the Apex indicator told me is optimal. Filled right away at 493. So visually speaking, I'm showing on daily because it'll be way more shocking. What was that? September 5th. Our trade is just betting that Apple drifts in this direction, which the Apex is a high conviction entry that it will. So this is very zoomed up. Here we go. So drifts to crosshairs right there. So we've given it more time versus if we did weekly, we'd be looking at here. We're going to give it more time to get there. All right, let's keep moving on this one because we've got some more exciting ones to trade. NVIDIA would have been a great one to trade. You can see here. Typically shoots much higher than a wrap order. Let me go see if we can find a good one. Oh, Costco. I like Costco a lot right now. Let's go ahead and take a look at Costco here. So if you were to trade Costco, again, we have the entry right here on the chart, profit target, stop price, everything all done for you. Now let's go look at our handy dandy cheat sheet. How long do we hold it? What's the optimal hold time? Does anyone know? I typically do weekly, just betting on high momentum stocks. But if we wanted to do this to perfection, we would look at our cheat sheet here. Costco has an 87% win rate with the Apex entry, and it's on a 7-week hold time. So again, we know the optimal holding time, and we know our odds of success. Really great odds of success. It takes a little more time than Apple, but I'm okay with that because again, I just want to stack up that waterfall effect. So it's not as fun as my 60-minute income where we see the results that morning. However, by doing this and just staying consistent, here in 4 weeks from now, 5 weeks from now, 6 weeks, I'm going to start getting paid for those trades I made, if that makes sense. That waterfall approach starts stacking as time goes on. So let's look at Costco options here and let's give it 7 weeks. I think we can squeeze that in before earnings. So 1, 2, 3, 4, 5, 6, 7. This is 7 weeks. However, they do have earnings on, let me just check the exact day. They have earnings on the 25th. So I'm just gonna cut it a week short there, just so we don't have to worry about earnings. And let's check the options prices. Here we go, guys. Let's look at this. Costco at the money call options, $3,000. Everyone see that? $3,000. We're not going to worry about that. We're going to wrap it. And so now, Here with the wrap order, instead of $3,000, is $268. Oh, nice. Hit the profit target in 60-minute income. Ha! Love it. Oh, there's XSP as well. All righty. Well, that's a good time. All right. Back to Costco. We're going to give it 7 weeks to hit that, not even hit the profit target. Profit target was all the way at 1,014. We're just going to give it 7 weeks to just go above, better than flat or down, knowing that it works a lot of time. And of course, if you want to, you can go further out of the money. If you wanted to play Apex for its target, you can go to the $1,000 target, enter for much cheaper. But let's just see what this is here. 263 on a $5 spread. 90% ROI here. So again, yes, you're right, Jeff. It's less than 100%, but a 90% payout if Costco does pretty much nothing. So here's Costco. Again, this does not mean it's going to absolutely guarantee to work out, but we know what the odds here. If Costco, what was that strike? 980? Do you guys see my crosshairs? 90% return on investment just by giving Costco time. So let me type this up for you guys. I'll post it in the chat as well. I hope this is starting to click for you guys so you can see how powerful this really is by using time as your greatest advantage here, your greatest weapon. We got a question about less expensive trades. Let me give you one here in just a second. But here's Costco trading for 263. I make 90% return on investment as long as Costco doesn't go down over, doesn't end up down 7 weeks from now, which we know, generally speaking, 87% of the time it ends up higher.
Geez, Graham, so much for saving closing playbook for all the free trades. You're lighting them up today.
That's my goal. I want to give them as much value as I can so that when you're on closing playbook, they think you're a big loser. They say, we want Graham back.
Well, I think mission accomplished.
All right. I posted that trade there in the chat. Does that make sense, everyone? As far as, hopefully it does. Hopefully I didn't ramble on too much. But basically, our edge here, as we saw with the S&P, more time equals better odds. 14-day hold time, 62%. This is just on the S&P. 21-day hold time, 63. 28-day hold time, 70%. So what if we know the optimal hold time for the best stocks out there? And that's what the Apex indicator does. It gives us the optimal hold time for the best win rates. Pretty stinking sweet, if you ask me. Hopefully you guys think so too. All right. So how does the Apex indicator work? Well, it isolates patterns unique to each stock on the hit list. Each stock has its own rules, its own entry criteria. No two stocks are the same. I compare it to a thumbprint. No one has the same two thumbprints. No two stocks have the same thumbprint because, hey, guess what? No two companies have the same board of directors. No two companies have the same CEO. Well, I guess like SpaceX and Tesla, but you get what I'm saying. Each company operates a little bit differently. So each one should have their own specific rules. So that blue arrow means we have an entry, obviously. Blue line, profit target. Red line, stop loss. And as you can see, as we get multiple entries, it sort of ends up trailing so you can protect your profits. Now, the secret sauce to the Apex indicator is how it uses that weekly price action for each stock and then measures that volatility versus the average. So essentially what it's doing is it's taking the data from Monday, Tuesday, Wednesday, and Thursday, and Friday and combining it into one bar. That's what that weekly candle is, obviously. But if you really break it down, it's cool. It just takes the total data of the week and then sees, hey, are we increasing the momentum? Are we seeing that ATR increase, that volatility increase? Could this be a high momentum breakout? And when we see that big candle expansion, like you can see here, plus week over week highs. So like this one's a big candle, but it didn't beat the previous week's high. Big candle, beat the previous week's high. That tends to mean we're going to see some drift, some momentum carry through there. That's what it's looking for. Now that gives us an entry signal saying that the asset should keep moving higher. Of course, there's more to it than that. And during the presentation, I kind of give you a teaser. Each one has very, very specific rules, but that's just the basics of it. Now remember, each stock has its own thumbprint, custom coded into the indicator, and then we just have the cheat sheet. So the indicator automatically updates for us. I don't even know if you guys can see this when I bring this over top. Oh yeah, you can. Cool. All right. The indicator automatically updates for each stock. Then we know, hey, what's our hold time going to be? What's the win rate look like? How much does it normally move? All sorts of data that we can follow along after that. And there's a little screenshot of it again. So how the math works, again, if you use wrap orders, the average Apex stock wins 86% of the time. I just took the average of all the trades and tickers. 86% of the time, you get about 3 signals per week. So if you did, and this is just basic theory math, this is not saying like this last week this happened or this last year. Each week in the year is going to be a little different. But based on the total sum of the values, if you did just $500 in each entry, you'd see about 156 new trades over the year, about 134 win, 22 losers. So if you enter each one with a 1-to-1 risk to reward with $500 in each, you're looking at a pretty awesome net profit at the end of the year. Just using that waterfall approach, letting time be on your side. Again, I'm not promising future gains. I'm not saying this will happen. It could be bigger. It could be smaller. But just based on the market math here and the historical values over the last decade, this is what it looks like when you let that waterfall approach work for you. Again, this is based on $500 in each signal, no compounding. Again, just to be very clear, not every year would look identical. The math is a bit more nuanced than that, but that's the general premise of this waterfall effect. Now, if you wanted to do some bigger gains, you would use the profit target as your strikes. So like I showed you on Costco, if you wanted to go for an outsized move, use that profit target as your gauge for the strikes to pick and the cheat sheet. So time and profit target. But the general premise of this waterfall stacking approach, this hijacking options I wanted to show you, is all about using that at the money wrap order and then the allotted amount of time to hit that amount. And then just following along, knowing it's not going to hit tomorrow, not going to hit the next day. It takes a little bit of time, but by applying this, you start to get that waterfall approach. That trade you set 4 weeks ago that you totally forgot about, all of a sudden it's Friday and you say, wow, I just made $500. Where did that come from? And you start to get that effect of the waterfall. Now, of course, this is recorded for you to review. There's more trainings in the portal. With that said, you can definitely take these Apex trades with just underlying stock. It's great for retirement accounts or just basic options. So don't stress about the spreads. It's not like it's mandatory you have to do the wrap order to trade this. I was just trying to show you my favorite way to take it. Now, let's go see if we can find one that pays a little bit more. And then I'm going to do a little bonus time. And then I'm going to let you guys get a chance to get this on to your charts. All right. I want to find a crazy entry. When I say crazy, a stock that moves fast. Oh, Meta. Perfect. Let me see what else we got. Microsoft. Oh, dude. Look, here you go. Not every trade works out. AJG hit a stop loss. Now you can say I've shown you. I'll lose it there. AVGO. This thing's just been a monster. I'm trying to find a stock that moves fast that just had an entry. Like AMD, unfortunately, just hit its target again. I know Meta and Microsoft. Let me see their. They're a little bit longer, 7 weeks. Essentially, what I want to show you here is like AMD, for example. When you get an entry, you can obviously AMD moves very, very fast, typically hits its profit target very quickly. If we had an entry, you can use that profit target to then say, and again, AMD, I think is a 2-week hold time. So let's say, for example, the profit target was 180. You can go out of the money here. And I'm just going to quickly do the math for you. And basically make a bet, 80 cents, that it hits its profit target and you get 212% return on investment. Unfortunately, right now, because they've all hit their profit targets, there's nothing that really looks. I wanted to find a quick one so we could do Apple. If you wanted to do Apple, essentially you would give it 4 weeks, 1, 2, 3, 4 to get to that profit target of 229. So let's call it 230 to round it up. If you took this trade on Apple out of the money, 212% return on investment if Apple hits its profit target in 4 weeks. I did the wrap order, which is just more conservative, basically saying, you know what, I don't care if it goes all the way to the profit target. I just think it's going to go better than zero, better than flat, given the high momentum entry. All right. I apologize. I'm out of time. I'm going over my allotted time here. But bonus time for stock traders. If you have a retirement account, I've got a couple retirement accounts. I love using Apex in it because in my normal brokerage account, when I buy and sell stock, I end up paying all these taxes, and it's so annoying. You get wash loss rule. It is the most annoying thing ever. With retirement accounts, though, this thing is sweet because the Apex stocks average about 6% return. That's winners and losers every 9 weeks. That's just the average of all the trades here combined. Obviously, some periods are better, some periods are worse, but on average, we're looking at 6% every 9 weeks. That means that's about 40% per year on stock, 40% annualized return. That's an insane number. Obviously, I can't promise future returns. You know that. But let's say you were only able to see half that result, right? Let's say what happens, the math says it's 40% a year. What if you only got half that result, 20% per year in a tax-free account versus 7% of the S&P? So $100,000 at 7% a year, it takes 35 years to hit $1 million compounding. That's just the market math. $100,000 at 20% a year, it takes 13 years to hit $1 million. Let me say that again. With the Apex tool in a retirement or an account that can grow tax-free, you can have a massive, massive edge. You cut the time by about 2/3, or in other words, compounding at about 3 times the rate. Again, I can't promise future returns. I'm not doing that here. I'm just showing you how valuable it can be knowing the optimal entries for each stock and the hold time. So I think it's amazing for multiple things. It's amazing for these wrap orders, that waterfall effect. And it's also amazing as a stock trading tool. So now we'll walk you through all the details of how it works, what makes it so powerful, how each stock has its own unique code, and I'll show you how you can get it on your charts today. And don't worry, I use Thinkorswim, but you can use Thinkorswim or TradingView. It works for both. Now, please, 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 if you are interested in the Apex indicator, stick around. Don't wait to catch us tomorrow because we don't bring it out very often. When we do, we'd like to do a little lifetime deal. Typically, it's like $3,000 for a year. Today, we're doing a much cheaper lifetime access, but that does end today. So I'm going to let Dave take over the screen here and then pull up that training for you guys. But again, please, please, please stick around and catch this class if you are interested in stacking up those waterfall effect that I've just shown you, plus many other ways to trade it. So,
all right, awesome, Graham. That was so cool, that deep dive into Apex and into how it works and the examples. Really appreciate that on everybody's behalf. And lots of people already talking about how cool Apex is in the chat. I'm sure you had no chance to look at it, but just like dozens and dozens of messages.
Oh, awesome.
I just want to do 2 quick housekeeping things before we get into, the presentation on Apex and how people can get it for themselves. If you look in the chat, everybody has this low latency image that I just posted. And I just want to talk about that because some people are having audio issues, some people are having video issues. So I just want to explain that in this new platform as we're all getting used to this, brand new platform that we're in. So if you're on a computer, this should be below and to the right of the video. If you're on like a much smaller screen, like a small tablet or a phone, it would be under the video to the left. And it's a little yellow slider that says low latency next to it. If it's yellow, if it's lit up, that means that you're going to see this presentation with close to no delay. The latency is referring to the delay, right? When Graham speaks, you're going to see it a second after he speaks. But what that means is that quick delivery might make it a little choppier, a little lower quality, depending upon how good your internet feed is and all of that. So if you're seeing choppiness, turn that low latency off. All that means is you're going to see everything 8 seconds after it gets put on the screen or after Graham says it. So 8 seconds is not going to make the difference in anything you're getting out of the presentation, other than that it may increase the quality and the smoothness of the presentation for you. The other thing that I want to mention is that as we go into how to get the particular program that we're presenting, in this case, Apex, We tried the whole private message thing yesterday, and it didn't work out because most people couldn't figure out how to do it. And so I'm posting one more image to the chat right now. This is where you would do it. So what you would need to do is you need to hover over the image that I just posted, and you should see a little double speech bubble. And that's how you can direct message me during this upcoming presentation. So while we're doing a recorded presentation each day in opening playbook and in closing playbook, whenever we switch to the recorded presentation, we're going to turn the chat off, and we're going to depend on that double speech bubble direct message. But you need to click on me to direct message me. If you click the bubble over somebody else, you'll be direct messaging them. So make sure that you click that double speech bubble over my name, and then you'll be able to ask questions and send me your email address for replays and your phone number for phone calls and all of that stuff without everybody else seeing your questions or your private information. And I'll be able to answer you directly as opposed to, posting the messages in the general chat. So appreciate everybody's messages right now, but we are going to turn the chat off and go to the private direct messaging. Please hover over my name if you have a question or a statement, and click on that double speech bubble, and you'll be able to message me. So let me get the presentation going. I'm going to remove.
It's kind of behind the scenes where a lot of the signals come from. So check it out. If you guys aren't trading with Apex yet, I mean, I think it's, again, just one of those foundational strategies where you can keep it simple, focus on the best stocks, and you're probably going to get a lot of really highly rated opportunities. I mean, just look at what Apex has been trading. I don't want to give too much away, but what Apex has been trading consistently the last couple of years, it's been trading Microsoft and Nvidia and O'Reilly, and you can't go real wrong trading those the last couple of years. Obviously, you saw how much people in the chat here up 1,000, up 50%, that kind of stuff. So. Love the idea of people getting Apex on their charts before tomorrow as well. And if we're still doing that special offer, then it'll be a no-brainer.
Yeah, we are. We'll be running that special offer tonight for anyone who wants to join. But let me walk through you. Let me show you how it works, how to get it on your charts, and then we can go from there and have some trades together. Obviously, we've been doing good on O'Reilly, been having fun, but it's not only on O'Reilly. Now, the reason I'm highlighting O'Reilly isn't just because we're making money on it, not just because we have a new entry that I'll walk you through today, but this powerhouse stock, it's up 227% over the last 5 years. Guys, this is O'Reilly Auto Parts. I don't think that O'Reilly's inventing any new crazy technology like Microsoft or Meta, yet this stock is just a beast. It's a powerhouse. It's returned a whopping 4,333% since its last stock split. Well, now it just happened. This was back in March. They just did another stock split, which is normally a very, very bullish sign for stocks. That's why I wanted to get O'Reilly in your guys' hands right away. So they did a 15-to-1 stock split from $1,300 down to $90 a share, making the stock more affordable for a broader range of investors. And if you guys saw my research on stocks that split and how powerful they can be, stock splits typically average 17% returns over the next year. So people say, well, doing a stock split is just artificial. It's like taking a glass of water and splitting it into 2 glasses of water. Not necessarily. The reason that a stock splits is to make it more affordable. And a lot of times that's for employees who have employee purchase packages. Also, stocks split because they get expensive. Why did they get expensive? Because they went way up. Why did they go way up? Because they're great stocks. So when a stock splits, it's normally a great money-making opportunity. Now, NASDAQ reports that this can strap a rocket to a stock's back, setting it to outperform the market by 25% to over 30% over the next year. And we're seeing that right now with O'Reilly. Now, I didn't invite you here to tell you to buy O'Reilly stock, even though you obviously can tell that's not a bad idea. But I want to show you a hidden pattern that I use to trade O'Reilly with an astounding 84% win rate. Now, that way you'll know how to trade this stock with this exact blueprint over and over again. In fact, I'm about to open the vault on unique blueprints for trading many of your favorite stocks out there. I'm talking about unleashing an automated trading program that gives us the exact historical win rate of any single stock setup before you place the trade. Plus, you get to see the profit potential as well. Now, it's all thanks to a new development based on 7,078 characters of ever-growing code. And when it's applied to your trading platform, it provides instantaneous alerts on stocks that could shoot higher with 80%, 90%, even 100% accuracy over the last 5 years. Like this 108% payout on Apple options. What about this 159% gain on Amazon options? Here's Meta, 378% gain on Meta options. Now, I call this breakthrough code the Apex indicator. And in just a moment, I'll give you a few stocks with a buy signal from the Apex indicator. I'll do that for free with their verified accuracy and profit factors all done for you. That way you can take some trades that are good for today, good for this week. You'll get them for free on the house. But first, let me show you how this works so you can get it on your charts and use them for yourself. Now, what you see here is the Apex indicator. As you can see, it's really not complex to look at, which is how I designed it. And all you have to do is wait for that bright blue up arrow at the end of the week. If it all looks good to you, you can place your trade before the markets close. And if you can do that much, you're already halfway there, because all that's next is knowing when to exit the trade. So after analyzing the price action, the Apex indicator automatically prints the profit targets and stop losses on the chart. That profit target is the blue line. We can all see that, right? That stop loss is the red line. Now, that way you're never left trading without the exact blueprint of the stock. Now, this example here was on Apple. And in this case of Apple, every time this bright blue arrow has shown up on the charts, Apple has moved higher with a historic 88.3% win rate. That's almost 9 out of every 10 times that this arrow's popped up, it's gone on to hit the profit target. And that's almost a 3 profit factor. Of course, with the Apex indicator in your toolbox, you would have known that in advance. So you could have followed along and placed a quick trade on Apple with a very high degree of confidence. And as you can see, nailed the profit target right away on the next candle that next week. Now, with the options that I prefer to use, that could have been good for a 122% move here on Apple. Now, that would have been no different than plopping $1,000 into the trade and walking away with $2,226 the very next week. Now, as great as it would have been to bag that triple-digit winner on Apple, that's not even close to the best part. You see, these highly accurate entry signals don't happen on Apple every once in a blue moon. They tend to happen all the time, specifically on stocks that are moving higher and breaking out. So that gives us countless opportunities to trade Apple with an incredible 88.3% historic win rate. 88% historic win rate on Apple over and over again. Every time we get that arrow, it's gone on to hit the profit target 88% of the time. And that's how some of my top students have already been able to see some incredible success from Apple by using the buy signals built into the Apex indicator. Like Kay, who said, keep the winning streak going. Apple, 100% gains 3 times in a row. Marco said, Apple trade took a few trades and 100% wins. Keep doing what you know best, trading. Howard B said, Apple got in at 88 cents, still holding. He's up 214% and $1,200. Now, as much as I'd love to just talk about Apple for the next 30 minutes, I've got so much more in store for you today. Because like I hinted at a moment ago, these highly accurate entry and exit signals, they don't just work on Apple stock. The Apex indicator has cracked the code to trading many powerful tickers. Every single stock with its own unique testing, optimization, and verified trading rules. Historic win rates and profit factors included as well. For example, like with Amazon, every time the Apex entry fires on Amazon, 83% win rate, 3.01 profit factor. How about Microsoft? 89% win rate every time Apex says it's a buy, 3.5 profit factor. How about NVIDIA? We all like trading NVIDIA. Well, if you have Apex on your charts, you know that every time the blue indicator fires, it's won 93% of the time with a 6.45 profit factor and many more stocks that we'll talk about today. So today, I'm going to cover each and every one of them for you with insights on how they trade differently from one another. Plus, I'm going to show you the big mistake that most folks make that keeps them away from these layup opportunities. But at the end of the day, you don't really need to know all the details. That's because my Apex indicator does all of the hard work for us automatically. We just check in near the end of the week for that bright blue buy signal, and that's it. You can even set the trades to automatically close out for you if you'd like. If you'd like to use those profit targets with an OCO order or something fancy, you can do that. So in the next few minutes, I'll give you a few stocks that just got an entry signal for free. But first, I want you to know that if you've ever found yourself having a tough time trading, stumbling around with win rates of 50, 60% and walking up the stairs just to fall right back down, all while the markets have been going up and down. Well, don't beat yourself up. You see, most people use common indicators, fundamentals, and popular strategies to trade multiple stocks if they're all the same. Let me say that again. Most people are using the same indicators, the same fundamentals and strategies to trade a whole basket of stocks like they're all the same. But that's a big, big mistake. Think about it. Do you really think that a car company or a robotics company like Tesla would trade the same as an AI stock like NVIDIA? Do these two stock charts, do they look similar? Do they have anything in common? The answer is obviously no. These are very, very different companies. Apples and oranges. Their price action are very different. Apples and oranges. Yet so many people make the mistake of trading Tesla the same way that they would approach trading NVIDIA. And this goes for any stock. Do you think Apple trades the same as O'Reilly, a tech stock in a car parts store? No, they're not going to trade the same. But so many people use the same entry criteria, profit targets, stop losses, you name it, trading the same stock or a whole basket of stocks the same way. But the truth is, every single stock has its own unique blueprint, optimal momentum and price action for a confirmed entry, high accuracy profit targets, and cash protecting stop losses. For example, let's look at Microsoft. Now, most folks have no clue, but if you want to spot the most high-powered trades on Microsoft, you're going to need some very specific criteria. You're going to need a 0.9% weekly candle size compared to the last 52 weeks, slight increase, and then a 1% distance between the 14 and 21-day EMAs, as well as a weekly close above the previous week's high price. Now, when all of that happens simultaneously, you have an 89% historic probability that Microsoft will have an epic bullish run with an awesome 3.53 profit factor. Like with the entry signal back in October, you can see it there, bright blue candle, 104% gain on the options. And then again, the next entry, 176% gain when it hit the profit target on the options. Now, notice how the AX indicator kept you out of this slump in between. Stock price chopped around for weeks on end, went nowhere fast, but there was no entry signals. And then it fired off the next entry signal, right? Again, when Microsoft was picking up steam. Rinse and repeat. This time the options that I prefer to trade, 106% gain there. You see, by letting the Apex indicator do the hard work for you on Microsoft, you could have gone 3 for 3 and avoided a slump in the middle too. So just $1,000 starting out, rolled into those trades back to back, could have paid out $11,628 in profit, just taking the same signal on the same stock over and over again. Now, at that rate, that would be like pulling an extra $2,907 each month just by trading that one stock. And that's a meaningful chunk of change. You guys know this. The cost of living has gone skyward. Last 5 years alone, we've seen the average cost of a new mortgage more than double. Now, maybe this will come under control, but I doubt it. Cost of living has gone through the roof. It went from $896 a month all the way to $2,205 a month for the average mortgage cost. Now, that's a jaw-dropping $1,309 increase, and it's not like people have a lot of extra change laying around to cover the difference either, not unless you're sitting on a pretty good nest egg to begin with. But folks who have taken advantage of the Apex indicator on Microsoft could have more than covered the average cost of the average monthly mortgage without needing to work extra hours or slave away at the desk job. Instead, you just do it by placing a trade when it says to enter and using the profit targets mapped out, which hopefully you can see that this is pretty great. Now, here's what's really important. If you traded another tech giant with the same exact rules as Microsoft, you think it would work pretty good, right? Wrong. It would be a total disaster. That's because each stock out there operates totally different from the next. For example, let's look at Meta, formerly known as Facebook. If you used Microsoft's optimized trading patterns on Meta over the last 6 years, you would have barely broken even on this stock. This stock's a great stock. You would have barely broken even. And that's because Microsoft stock operates totally different than Meta does, where Microsoft needed a 0.9% weekly candle relative to the last 52 years or 52 weeks. Meta is optimized for 1.25%. Instead of needing a 1% distance between the EMAs, Meta needs a 0.5% width. The profit targets, Microsoft, 5% profit target. Meta, look at Meta. It tends to go up a little faster, a little further. 7% on Meta. If you did 5% profit targets on Meta, you'd be cutting yourself short.
That's because the rules for each single stock blueprint are night and day from one another. Now, again, I know this broadcast is pretty detailed. Of course, you don't need to remember any of these numbers because the ever-expanding thousands of characters of code that go into the Apex indicator automatically have the optimal rules baked in. So in the case of Meta, this unique blueprint produced an incredible 86% historic win rate and 2.3 profit factor on Meta. Again, once you have your hands on the Apex indicator, you would know all of this in advance. I have a little cheat sheet card for you guys, and that allows you to place your trade without second guessing yourself. The indicator automatically updates these rules, these parameters for each stock that's tested. So it's not like you have to go manually look at Microsoft and know the rules. No, it's already baked in. So you don't need to guess when to enter, when to exit. It's all done for you. In fact, it's already worked out 10 times out of 10 over the last 24 months, including the bear market that on Meta, with some of the top options paying 65%, 196, 378, 434% gain there. Now, of course, the Apex indicator would have done all of the heavy lifting for you, all automated with the optimized rules for trading Meta proficiently. We just had one the other week on Meta, hit it out of the park. You see, it's like each stock is a vault of its own. And unless you have a way to track down all of the individual elements of each stock, your trading results will likely remain subpar at best. But as you're about to see, for the first time in history, the Apex indicator is the key to unlocking these single stock blueprints. Now that means after this class, no longer will you have to use common strategies, indicators, fundamentals, or anything like that to guess on a stock's next move. Starting today, you can place your trades knowing the exact historical accuracy rate of that single stock setup, plus the profit potential too, all in advance, before ever risking a single dollar of your hard-earned money. So think about this for a moment. If you could tap into Apple with an 88% win rate, Microsoft 89%, NVIDIA, get this, 93% success rate on NVIDIA, knowing the entry price, stop, and profit level all in advance, what would that do for you? Maybe make you more confident, allow you to stick to your plan, right? It does it all for you. You don't have to get your emotions involved. When it works, like it does about 90% of the time on a lot of these tickers, you're paid. And when it doesn't matter. You move on to the next one. You just follow the rules. And in my opinion, maybe it'll finally unlock your full trading potential. Well, that's exactly what the Apex indicator aims to accomplish. Just like some of my top students have been able to do by using the clear-cut buy signals built into the Apex indicator. Greg made $1,040 on NVIDIA. Carson took Apple, made $2,000. Robinson made $5,360. Now, let's not get carried away there. We all know that with trading, there's winners and losers, and you should never risk more than you can afford to lose on any single trade. But you just saw multiple folks, people just like you, who have been able to use the buy signals behind the Apex indicator to make $1,000, $2,000, even as much as $5,360 on a single trade. And it was only possible by first cracking the code to each individual stock, each ticker with their own tested, optimized, and verified trading blueprint. For example, let's look at Costco. That was one that I just told you that I really am starting to like right now. Well, this stock too has its own specific trading rules. You want to see a 1% candle relative to the last 52 weeks. You do not care about the EMAs. It needs at least a 0% change. So just above positive or above zero, and a profit of 4% on the underlying. And with that unique combination for Costco, it's unlocked profit opportunities with an 87% win rate and 2.27 profit factor. So that way, when you see the bright blue candle like we got back in December on Costco, you can enter with a great deal of confidence. Again, historically, 87% of the time, it's won. And then simply follow along with the stop loss and profit target if you like what you see. And in this example, with the options I like to use, 295% gain on Costco. And then look at this. Another blue up arrow means we get to do it again. This time it worked out too, 158%. Then again in February, same thing, 105%. Now, if someone started with $2,000 in those and just pulled the initial starting stake and rolled with house money, that could have ended up paying $20,728 over the course of those 3 trades. And again, that's pulling out the initial stake. So that's 10 times total return on the starting investment in less than 3 months. Now, it doesn't take a rocket scientist to realize that you won't be able to get those types of returns in your standard index fund. The S&P is not paying 10x a year, let alone in 3 months. Or even if you bought a top stock like NVIDIA or Microsoft at the beginning of the year, you're not seeing anything near those results. Now, you might be thinking, in a bull market, I'm sure Apex Indicator does great, right? Stocks go up. Of course, the best stocks are going to go up as well. But what happens in a bear market? What happens in a recession? Does it work? Does this blueprint really hold true? Well, I want you to rest assured that I would never have been able to hit some of my top trading gains if it weren't for a plan that can last in any market condition, bullish, bearish, even flat markets. Here you can see some of my trades using Apex, 122% on Progressive, 112 on Apple. Couple wins, Apple, Amazon, and NVIDIA. We have got one on O'Reilly right now. We've been taking them on Meta. You see, the force of nature behind these high-powered entry signals is so strong that it really does not matter whether what the economic condition is or who's in the White House. And don't just take my word for it. Let me show you in action. Let's go back to the bear market of 2022. So the question is, does this work in good and bad markets? Let's take a look. Here's Tesla. It does not get much worse than this. Stock was down actually 75% from the peak. So it went from $400 to $100. Terrible, terrible, terrible time to be long Tesla. Trading this ticker successfully would be like trying to find a needle in a haystack. But luckily for us, and I just showed you this in the closing playbook session, the Apex indicator found 6 needles in the haystack. It didn't just find one, it found 6, all of which would have paid big. Trade number 1, 450% on the options. Trade number 2, 320% on the options. Trade number 3, 263, 157, 186% gain, and then 67% gain. This is fun. When you get a back-to-back weekly entries, that's like double confirmation, and both hit the profit target. Now imagine starting with $2,500 and not rolling a single penny, not compounding a single dollar. That would have helped generate an extra $36,253 for the year just by trading Tesla, just 6 trades, trading the same stock over and over again just by using its unique blueprint, all while the stock cratered. Stock fell 75%. Your account was booming. Or in other words, that's an extra $3,021 each month. It's a needle moving stack of cash. Again, inflation's taking the cost of living out of control. Folks are having to work longer, pull money out of their retirement. It's not great. All across America, folks are absolutely starved for extra cash flow, and they're doing anything and everything they can to help cover the cost of living. Again, you've seen this. They have to work longer. They have to stop saving as much, maybe increase credit card use, tap into retirement savings. No good. It's brutal out there. But in this case, these 6 winners in a row could have helped tilt those scales back in your favor. And again, that's $3,021 in each month on average. We're not talking about trading 6 times a month. This was 6 times for the full year. You barely had to do anything to see that at $36,000 over the year. Again, pretty crazy stuff. Now, of course, going 6 for 6 would be tough to do for most traders out there. No one should expect to win every single trade. We all know that with any strategy, there's going to be winners and there's going to be losers, so never bet the farm. But get this, when it comes to using the Apex indicator on Tesla, you may not have even been surprised to win 6 in a row. That's because based on the optimization of Tesla with the Apex indicator, the testing hit 100% win rate with Tesla's unique rules. That's how good it is. That's how good the Apex indicator is, and that's how powerful it is when you find each stock's own unique blueprint. Again, the Tesla rules are nowhere near what Microsoft rules are, nowhere near what Meta's rules are. They each have their own individual trading rules optimized for that ticker and then automated within the Apex indicator. So you would have known all of that in advance before ever placing the trade, because I give you a cheat sheet with the card that gives you the win rate, hold time, profit factor, a whole bunch of information from each ticker. Now, hopefully you're starting to see the power of the Apex indicator, but more importantly, I hope you can clearly see the necessity to treat every single stock different with its own unique blueprint. So now we still have a handful of stocks left to cover that the Apex indicator has mastered. And again, you get this cheat sheet. Tells you the win rate for each individual stock, the average return, the profit factor, so you know how to place the trades. Plus, I'll take a live look at the newest entry signals, which I'll share for free today. But first, I want you to understand a little bit more about how this tool works. You see, even though we call this an indicator, it's not like some extra tool that would pair with other strategies. The Apex indicator is a one-stop shop for all of your swing trading needs going forward, with the clear-cut entry, profit target, and stop loss. And to make it even easier for you, the indicator automatically displays that exact number in the top left too. Stop price, you see it there. Profit target price, you see it there. Printed in plain English for you. But what makes the Apex indicator so dominant with the win rates of 80%, 90%, even 100%, well, that's because of its unique ability to isolate profit cycles on any given stock. Now, these profit cycles make up the biggest momentum windows on stocks. And as you may already know, my research first started on Apple with this. We just wanted to see when these weekly candles get huge, what happens next? Well, with a couple of different factors playing in, when all align, typically you get these massive outsized moves. And as far as I know, I was the first in the world to isolate Apple's weekly profit cycles by using a unique set of data and rules. And since then, I've been sharing the entry and exit signals with some of my readers. Biggest win so far was 436%. And even more impressive is the model portfolio hit $70,000 in 10 months of trading. That was based on 5K starting out, $70,000 in profit, 3.5 profit factor on live trades. Now, I'm not actually here to talk about my perfect Apple program, nor the hundreds of folks who have been following along. You've probably seen some of these stories before. But after having so much success with Apple, I had to wonder, what if I could replicate the success on other stocks out there, right? So I first applied the same exact rules that I use on Apple. I then said, let's throw it on Amazon. We should get some good results. But the testing came back terrible. And that's where I first began to understand just how different each stock trades from one another and how each one should have their own specific and unique blueprint. You see, Amazon profit cycles come at a quicker pace than Apple's. You can see that they're a little bit faster moves. NVIDIA's like to happen back to back. AMD, which we've been trading a lot of AMD lately, typically happens in short bursts. But by testing, verifying, and optimizing the entries, profit targets, and stop losses on each one, we would be able to unlock the blueprint to some of the most profitable trading that I know of. And that's exactly what I set out to do. I worked with developers to start custom coding these single stock blueprints one at a time. Now, across the team, we have over 200 years of worth of market experience, and we've been adding to this team. We've got former hedge fund managers, banking VPs, option specialists, commodity experts. We got AI wizards now. And now, with that many cooks in the kitchen, you better believe when we all agree on something, it's pretty darn remarkable. So there's no settling for less, no hidden agendas. We're just looking for the best winning trades. And that's why we are so picky before ever releasing a new addition to the indicator. That's why there's not thousands of stocks on the list. We want the best of the best of the best. Like I said at the beginning, you can go look at 2,000 stocks, be my guest. I would much rather have a list of 10 to 15 stocks and I'm making money on over and over again. So in order to make the Apex list, it needs an extremely high win rate. It needs to see a profit factor of 2 or greater, and the ability to outperform the top stocks in the world at any given time. So if we can get the testing to verify just that on any given stock, the custom code is added in and the power of the Apex indicator grows. Now, currently, there's 14 stocks that have passed the test, with O'Reilly being the latest addition. Look, O'Reilly hits 84% win rate. Check this out, 5% average return. You get to see this all in advance. So you get to set your options. What happens if it moves 5%? And the profit factor is 386. You also can see the weekly or the average hold time too. That didn't get included here, but that is in the members area. AVGO, same thing, 89% win rate every time it fires, 4% average return, awesome profit factor. We've got Bitcoin in there now, IBIT. So now, eventually, there will be hundreds of tickers on this one-stop shop trading tool. I'm young. I'm going to be doing this for a while. I will be constantly adding to this. But it's not going to happen overnight. These additions will not be rushed. I will only add a stock to the Apex indicator if we have truly cracked the code to its unique trading blueprint. I refuse to let subpar results get mixed in. Now, my team originally wanted me to sell this one-stop shop trading development for $10,000 or more. And to be honest with you, this trading tool would be worth that much, even if it only had one ticker on it. For example, let's look at NVIDIA. When everyone called it overbought, overhyped, overvalued, or even ready to crash all year long, you guys remember these headlines, lots of headlines. My Apex indicator had a different story with 93% win rate and 6.4 profit factor. So you tell me, would you rather listen to these news, these talking heads who are really just posting whatever they can to get you to click? That's how they make money. They try and get you to click on their article. So of course they're throwing crazy stuff out there. Or would you rather follow along with something that's proven with a historical 93% win rate, 6.45 profit factor? For me, that's a no-brainer. No-brainer. So while most people were screaming overbought, NVIDIA ripped off a shocking 5 consecutive profit cycles. week after week after week. This is not usual. This is very rare, but this happened. And there you can see Apex indicator in real time. 158% gain on the first one, 122 on the next one, 96, 167, 57% gain. This went back to back to back to back to back. NVIDIA is maybe the best one for the Apex indicator, and you'll see why. If you put $1,000 into that first trade and you compound it from there, again, you should not necessarily do that. This is just showing very aggressive what could happen if you did some aggressive stacking. After 5 weeks, that's $46,058 in profit. So clearly, even paying 10 grand for just this one ticker would be more than worth it to access the Apex indicator. But just when you thought that was gorgeous enough, we're not done. NVIDIA went on to hit 3 more in a row. So that's 8 for 8 while everyone else was on the sideline reading the news and freaking out. That would have sent the starting stake up to north of 6 figures. And just over the last 2 months, we've been hitting these winners on NVIDIA. Now, of course, I want to remind you, not every trade will win. Don't bet the whole house in. There's going to be times where we have big wins, small wins, and losers too. That's what we sign up for as traders. But I must ask you the question again. If you could trade Apple with 88% confidence, Microsoft with 89%, NVIDIA with 93%, and you know the exact entry, stop, and profit level in advance, what would that do for you? What would that do for your trading? Would it give you more confidence? I sure hope so. If you have 88%, 89%, 93% historic win rates, I sure as heck am more confident when placing the trade. Does it actually give you a plan that you can stick to versus kind of just eyeballing it? No, this is down to a T exactly what to do. And maybe that helps you finally unlock your full trading potential. And that's exactly what the Apex indicator aims to accomplish. And today you have a chance to be the next person to tap into these unique single stock blueprints with a few clicks of a button. As a matter of fact, there's really no install needed. You just copy and paste the link like we do with all of our indicators, and you're off to the races. We've even got it hooked up for TradingView too. So if you don't have Thinkorswim, don't worry. It's on TradingView as well. So there's really no reason you can't get started with this groundbreaking development today. Kathy did the install, said it was easy. Thanks. Diana wrote in all the trades were 100% winners. No losers among them. Now, obviously, we're going to have losers, but when you're winning 90% of the time, it would not be rare to have a nice little hot streak there. JP told us the Apex indicator helped him earn $1,000 last month. He did it with a little bit more this month, made $5,000. Benno said only winners so far for him. And in just a moment, I'm going to offer you an opportunity to add the Apex indicator to your charts and give it a test drive for free if you like. And I really mean that. But first, let me go ahead and share with you the stocks that we're currently looking at with the entry signals for free. Apple, actually, funny enough, it fired off a new entry earlier this week, but we're going to look at this tomorrow. But we just had an entry on Apple. You can see Apple profit target, $224.22. Stop price on Apple, $183.65. It fired off back here. So it's still a valid entry. Profit target about $10 from where Apple is now. It's 5% on Apple. O'Reilly, we've been talking about O'Reilly. We took this trade just the other day. It's already almost at the profit target. Well, we have a new one firing off right now. New profit target price, $111.94. That's what this blue bar is, $111.94. Stop price, $91.21. Again, this is all drawn up for you. When you have the indicator, it's automated on your charts. Meta, I love Meta. My biggest single stock holding right now, maybe other than Progressive. New entry for us. Profit target price, $802.51. You can see that right there. It all lines up. Stop price, $600. It's already moving. It's already almost there. I mean, it's at 7. Let's see. The high price this week, $783. It almost got to the profit target this week. Still some meat on the bone, but that's a valid entry right now. And starting today, every time you see a bright blue candle on your chart, it represents another opportunity for a big move on an Apex stock with historic win rates of 80%, 90%, even 100%, and profit factors ranging from 2 all the way to 30. And with this powerful indicator on your platform, you'll be locked into every single one of them. No more chasing the next trading fad. No more guessing on when to enter. No guessing on when to exit. No trading setups that have a low historic probability of success. You know all the numbers in advance. Most importantly, no more trading blind. So I put together something I call the Apex Indicator Strategy Blueprint. This is a PDF guide that takes you through step by step everything you need to know about the Apex Indicator, including how to use it for maximum effectiveness, how each component works together, and how to apply it to any type of trading or investing style. Plus, you'll see a little secret built into this trading development that's simply too valuable to share for free in this class. Really the secret sauce to it all. Hint, this has been able to take our win rates up by as much as 31%. And the majority of traders I know would never think about this key insight. It's something that's very, very valuable that you should apply to other trades you're taking. Now, with this in your hand, you'll be ready to hit the ground running with the Apex indicator and maybe trade one of my favorite tickers, Progressive, with it right away. Now, just like you could have over and over again with some great wins last year, 73% historic accuracy, 2.7 profit factor. Look at this, 70%, 69, 93, 65. Again, you're just following the Apex indicator entries. Now, I love trading Progressive stock with the Apex indicator, and so do my students. Clay said, paid PGR trade, he made $1,000, paid for the service, looking forward to more. Dad made over $5,000. Both were Apex winners, made 92 on the first one, 102% on the second one, over $5,000 in profit. Now, that's just a glimpse of what you'll be able to tap into when you get access today. So in addition to the strategy guide, I also have an Apex indicator install guide for you, which gives you precise instructions for how to install it on Thinkorswim or TradingView. Don't worry if installing an indicator sounds scary. It takes no technical skills to do it. Just one click a link from the members area to launch the install. That's it. And if you just prefer TradingView, you just click the link and you add it to your chart and you are done. So another click or two and you are good to go. I even have a video in the members area showing you exactly how it works click by click. So don't worry if it's not hard to install at all. You guys saw some of the folks. If you guys have installed any of our indicators, same sort of process. Copy and paste the link, you're done. Now, if you don't have Thinkorswim, that's totally okay. You can still put the Apex indicator to work within a matter of minutes. So you have two options. I want everyone to be able to benefit from this breakthrough. So we spent the extra time and resources to get it programmed for TradingView as well. Now, if you don't have TradingView, you can set one up for free at their website. I don't have an affiliate link, nothing like that. They're just a great tool, great resource that you can have for free. You don't even have to download anything to use TradingView. So you have it available for TradingView, one click away. Or you can do the second route that a lot of folks do. You can just download Thinkorswim. It's free. Download it on your chart, add the Apex indicator, and then place the trades with whatever brokerage you prefer. And some of my friends even have never used Thinkorswim before, but they've been able to get the Apex indicator up and running very easily. Now, my point is you don't need to have any experience with any platform to use the Apex indicator, especially with the PDF guide and accompanying video walkthrough. Now, to be clear, I do want you to get the absolute most possible out of this powerful breakthrough. So I am also including live Apex indicator trading sessions. In other words, when there are major stocks setting up for what I think could be an especially noteworthy move, we'll have a trade room. We're going to do one tomorrow. We're going to take some trades tomorrow. So I really, really want you to have this on your charts so that you can follow along. We'll both be looking at the same playbook there, and you'll see how it works. That way you can then take what you've learned and apply it in the weeks to come. Now, I personally think these live sessions are worth at least $1,000 each time I do them. And if you've attended them in the past, you might agree. We made a lot of money trading live together. This one was a fun day. Made $1,700 trading live together. Looking at DraftKings right now on my chart over here, it looks like we'll be making some money on that too, trading together. We've got one on O'Reilly as well, making money on O'Reilly. We made money on Meta, AMD. And the students following along love these urgent trading sessions. Sandy made $2,500 when we did a trade on NVIDIA. Greg said his first trade exceeded the program cost 3 times. Thanks again. Richard said